A financial alarm is sounding, and the world's wealthiest are the first to hear it. Jeff Bezos just cashed out $13 billion of his Amazon fortune. Mark Zuckerberg is liquidating Meta shares on a scale we've never seen. And Dimon, after nearly 2 decades, sold JP Morgan stock for the very first time. This isn't about buying a new yacht or funding a charity. This is a coordinated retreat. A mass exodus of capital by the people who have the best information on the planet. And what they're seeing in the data should be a warning to every single investor. Larry Ellison at Oracle, the Walton family with Walmart, and the key architects of Nvidia are executing massive, simultaneous sell orders. This isn't a coincidence. It's a pattern. And it's a pattern we've seen play out once before with terrifying accuracy. The last time insider selling reached these historic levels was in 2007. We all remember what followed. Let's break down the sheer scale, because the numbers are staggering. In 2024, corporate insiders sold a collective $464 billion in stock. That is the second largest sell-off ever recorded, the largest? 2007. But the real story isn't just the volume, it's the ratio. For every single dollar insiders are using to buy stock, they are selling 9. In a normal market, that ratio is around 3 to 1. 9 to 1 is a screaming red siren. This isn't portfolio management. This is a strategic withdrawal from the front lines. Let's look at the players. Why are these specific sales so incredibly telling? Start with Jeff Bezos. He filed plans to dump 50 million Amazon shares, a move worth about $8.5 billion. Then he filed to sell another 25 million. The official reason? A move to Florida for tax benefits. But he's been a billionaire for decades. He could have moved any time. The real reason is likely that he sees Amazon's stock at a peak and knows that what goes up must eventually correct. Then there's Mark Zuckerberg. He sold roughly $40 to $50 billion in Meta stock, his largest sales ever as a percentage of his holdings. The stock was touching record highs. He claims it's for his philanthropic foundation, but the timing is convenient. But perhaps the most significant signal of all comes from Dimon. The CEO of JP Morgan had never ever sold a share in his 18-year tenure. He built his reputation on believing in his company for the long haul. Then, in 2024, he sold 1 million shares. The reason given was estate planning, but he's 68. He could have done this 5 or 10 years ago. He chose now, when the market is at an all-time high, and he, as the head of America's largest bank, has a perfect view of the coming economic storm. When the captain abandons the ship, you should ask why. Larry Ellison sold $3 billion in Oracle. The Walton family sold over $2 billion in Walmart. And at Nvidia, while the stock was skyrocketing due to AI mania, insiders were quietly cashing out to the tune of $700 million. They are selling into the strength, into the euphoria. They know that the AI boom, like all booms, has a bust cycle. So what exactly do they see that the average investor is missing? They see the Buffett Indicator, which measures the total stock market value against the size of the economy. Right now, it's flashing 185%. Deep into what Warren Buffett himself calls bubble territory. Historically, when this number gets too high, a major correction follows. They see the Shiller P ratio, which smooths out earnings over a decade. It's currently at 34. The only times it's been higher were just before the dot-com crash and the 2008 financial crisis. They see margin debt money borrowed to buy stocks sitting at a terrifying $950 billion. When the market turns, this leverage will force a cascade of selling as investors get margin calls, accelerating the downturn. They see a mountain of corporate debt, over $12 trillion, that was borrowed when rates were near zero. That debt now needs to be refinanced at 5 to 7%, a cost many companies simply cannot afford. Defaults are inevitable. They see the commercial real estate market, with office buildings sitting half empty and over $2 trillion in mortgages coming due. This is a direct threat to the regional banks that hold these loans. They see the federal debt, a $38 trillion anchor on the economy, with interest payments becoming unsustainable. And finally, they see the inverted yield curve, A predictor that has foreshadowed every recession since 1950. It inverted in 2022. The clock is ticking. So what happens next, and what can you possibly do about it? History gives us a clear playbook. In 2007, the insiders sold. The market peaked in October, and then it crashed, falling 57%. Those who sold early watched from the safety of cash, then bought back in at the bottom for pennies on the dollar. The same pattern is unfolding now. The heavy selling in 2024 suggests a potential market top, with a crash likely in late 2025 or early 2026. So here is your action plan. First, reduce your risk. If you're overexposed to stocks, consider taking some profits and raising cash. It's not about timing the top perfectly. It's about preserving capital for the buying opportunities that a crash will present. Second, think about insurance. A small allocation to gold can protect against the money printing that will inevitably follow a crisis. Protective put options can act as a portfolio hedge. Third, and most importantly, prepare your buy list. When fear is at its peak and quality companies are on sale, you need to know what you want to own. The time to dig your well is before you are thirsty. Do not try to short the market. The billionaires aren't. They're simply moving to the sidelines. Your goal should be the same. Preserve, protect, and prepare to be a buyer when everyone else is panicking. This is the billionaire exodus. They are voting with their wallets, and they're telling us a storm is coming. The only question that remains is whether you will be prepared when it arrives. If this pattern makes sense to you, if you see the warning signs flashing, then make sure you follow this channel, Money Timeline. We will be tracking these signals closely over the critical months ahead. And if you found this valuable, please subscribe and like this video. It truly helps us out.